it's Joe Mazumdar of Exploration Insights doing the Metal Investor Forum webinar. And we finished the presentations. Now we're doing the backstage interviews, I guess, without a stage. Right now I've got Cal Everett, CEO of Liberty Gold. How's it going, Cal?
Doing really well. Sitting in my basement like everyone else is doing and finding out of my time.
Yeah. Weren't you always in your basement, or?
Yeah, I kind of do. I've been working from here for a few months now. So it's pretty good.
Yeah,
the only way I'm moving with this virus is if the house slides downhill. So there you go.
Okay. All right. So getting to Liberty Gold, I mean, following up from Liberty Gold is, the seeds of the management team as from the Oxygen Capital Group that was Frontier, and a lot of these same people are involved with Liberty. And so, can you talk about who's behind this company?
Yeah, the company was a stock dividend in 2011 from the takeover of Frontier Gold because they had made the Long Canyon oxide gold discovery in Nevada. And this was a stock dividended company that went to the shareholders on some ratioed basis. And then the company from 2011 till, I guess, 2016 bounced back and forth exploring in the Great Basin and in Turkey, and had multiple projects with discoveries in both locations. And then I joined the company in 2016. Mark O'Day is the chairman. He's still there. The same board is there. Moira Smith, the VPX, who's responsible for all of these discoveries, and her geological team. They've all been together since Frontier days. And it's just a tremendous track record of success of all these people. And when I joined in 2016, they said, what do you want to do? And I just made a decision to become Great Basin focused, because I was just assessing the rising geopolitical risk around the world, and I wanted to be in North America. And then started a process of project acquisition. We bought the Black Pine project. We drilled off a nice resource and a good economic study on Goldstrike. And in the same time, I've been monetizing non-core assets, raising capital for the company.
So I think that there's a few points there that are valid, that are important for our listeners that don't remember the Frontier acquisition, which was for multi-billions of dollars for the Long Canyon open pit heap leach in Nevada, which is only a few. It's not very far from Elko, which is where Newmont's office was, and so is Barrick's. So that was an opportunity to show a deposit that people didn't think existed, and Moira did an excellent job of bringing that up to a resource and getting it sold. But in the interim, with all those acquisitions in other countries, that's serving you well with respect to funding, your focus here in Black Pine, is it not?
Oh yeah, it's helping because it's all my agenda is really just to simplify the company to Goldstrike, Black Pine, because it's a big discovery, one of the largest ones we've seen since Long Canyon, and cash and receivables. And by doing that, the company is streamlined, and that means the shareholders and institutional investors or any corporates that we talk to know that the dirty work is done, and the company is all cleaned up, right? And it's specific and easier to understand.
But also, a lot of people may not be giving you a lot of value for the assets in Turkey and other assets. And when you monetize them, not only does that instantly become accretive because no one's giving you value, but also it saves you on dilution on the denominator going forward in terms of funding your projects, right?
Yeah, it's a double savings, because when we announced the sale of TV Tower, Halila in Turkey, with Tech Corporation, our share, we had zero valuation of that asset in our market cap. And so we received a $4 million US advance payment that's in our bank. And the next payment is due by August 15th for $6 million US, and then August 15th the year after, and August 15th the year after. That's all non-dilutionary. But it's more than that, because the holding costs on that property were hitting me for about $350,000 US a year on top of that. So it's a savings on expenditures on G&A, plus it comes back into working capital with no dilution, and the money comes in fully hedged because it comes in US dollars.
Right. And without belaboring the point, the issue for a lot of juniors is when they have too many assets in too many jurisdictions, and it soaks up management time. By divesting them, you got that, a laser focus on the assets that you think will actually add the most value. So if we get to Black Pine, like as the gold price goes up, a lot of these open pit heap leach deposits are coming out. What I guess separates or distinguishes Black Pine from the rest from your peer group?
It's distinguished in a couple ways. One of it is location in Idaho, because there's no fish-bearing streams anywhere near this discovery. It's if you come off the gold system towards the valley floor, that's the dry part of the Great Salt Lake. And there's no stream. You can see the Great Salt Lake 60 kilometers in the distance from the top of the mountain. And the property went through a forest fire around 20 years ago, so there's no timber values. We've done archaeological and biological studies. We don't see any endangered species or animals there that we have to deal with. There is lots of water. There's got in the valley floor, and the mine well is still there to be allocated only to mining, and we're trying to secure access to that water right now. We have a water group together to try to secure water rights. And we deal with Forest Service representatives. They are exploration geologists, and it's been a dream to work with them. It's so easy on permitting. They walk you through absolute everything, and they do site visits. They come through, and really it's probably in the history of this company, and this is Moira's words because I haven't been there more than 3.5 years, but it's been the easiest permitting process she's had in the Great Basin for 20 years. That's one of the reasons. Interesting part. This property, the entire mountain is an oxide system. And it was left unstaked for 10 years. And when we purchased it for about $1 million US in aggregate of cash stock and 0.5% NSR, it only has a 0.5% NSR on this project. If you go look at some of the mines like Marigold that SSR is doing a great job mining in Nevada, they're mining 0.3 grams in their last quarterly report, and they're still producing gold at an all-in sustaining cost of mid $950 an ounce. And so it's low grade, but high margin rock. And that's with a 10% NSR on that deposit.
Whoa.
Okay.
That's the beauty of run of mine. That's the beauty of run of mine with no crushing.
No crushing and big shovels and big trucks, just earth moving, right? That's the same kind of thing we envision at Black Pine. And the Black Pine system actually covers a minimum of 12 square kilometers. And there's over 1,800 historical holes that sit there. Most of those holes have unmined oxide that they left behind. We've now linked together the 5 historical pits over a 7.3 kilometer area as to one mineralized zone, and we've drilled 1 square kilometer of that out so far. And now we're doing a regional test geologically and to see if what the oxide looks like all over the mountain, to just do a broad brush test before we pick focus areas for this year.
So right now you're with the COVID-19 pandemic impacts and that Idaho has actually declared mining an essential service, so you can work.
Yeah, we're on our 3rd drill shift starting today, and there's 2 drills operating, and they work on a single shift basis. They drill about 300 feet of RC a day per machine on average, and it'll go down if you're in really buggered up rocks that have been faulted up and really oxidized or just fractured too much. But at the same time, we just keep pierce pointing it. We're moving 500 meters this way and a kilometer in another direction. So when you see numbers come out in the early days, we're probing for more oxide to figure out how big of a volume of rock we're looking at that's got oxide in it. And then we'll also be targeting new zones, and you'll see it when the numbers come out. We're just starting, I think, to see a few numbers come in now.
As we know, Cal, besides tonnage and potential grade of open pits, the big deal is, grade, is metallurgy. What is the recovered grade of these deposits? So metallurgy, how far advanced are you with respect to metallurgy at Black Pine?
Okay, well, the average run-of-mine heap leach in the Great Basin is maybe 0.45 grams right now, maybe a bit lower. And the average recovery that's published from the producers is 70.53% for all the oxide mines that's published. So the historical column tests from Liberty were 77 to 87%, yet they recovered 65%, which still wasn't bad for a run-of-mine, but they put carbonaceous material on the heap leach pads, which is obviously waste. And where one area around the A pit, there has a little bit of clay, so they didn't crush that or agglomerate that one section. And finally, at the end of the mine life, the last 2 years of the 5 mine life, they got it correct and they got an 80% recovery. So we kind of think we're going to come in that 75 to 85, 87% range on this.
Yeah.
And the bulk samples will be ready to come out, I would think, in a couple months, maybe. And then the column test, 29 column tests, which tests all different rock types. So it's going to be a scattergram of anything that we looked at. Those will come out probably a couple months later, and that'll be a key one with the analysis of this discovery.
Okay, and there might be a domaining where there's parts of it that might be run of mine, and there's other parts that might be single stage or multi-stage crush.
Yeah, it might even complicate itself more than that, because when you start getting 50-meter intercepts over 2 grams, you might want to be considering milling that.
Yeah.
Right. And so you're going to have to find out what these super high grade subsets are, because instead of getting, say, 80% recovery and you go to 92 or 95, you have to do a trade-off on a mill cost versus ounces discovered.
Yeah. Well, I've seen a lot of these open pit heap leach in the older times, like Castle Mountain had a small milling component to take care of the higher grade parts of the deposit.
Yeah, I talked to Equinox about that in November at a show in San Francisco, and we talked about it for over an hour. And yeah, they're going to add a mill to this to the Big Castle project when it's fully permitted, just to take that high subset, because the average grade of that deposit, it's a big deposit. It's over 5 million ounces at 0.56, and which is great. It'll work, but if they've already done their economic study that says they want to mill the high grade.
Right. And for them, the high grade might be like 2 grams, 1.5, 2 grams.
Yeah, when I talked to Greg Smith at the time, he said it was 3 grams. I would think at this gold price, they'd be rethinking that substantially lower.
Yeah. Okay. All right. Well, that's good. So that's Cal Everett, CEO of Liberty Gold. I'm Joe Mazumdar, Exploration Insights from the Metal Investment Forum webinar. So thank you for watching, and good luck in investing. Thanks, Cal.
Thanks for your time.